Hello, this is Japanese Economic Review Channel. Today, we're diving into the official December 2025 monthly labor survey, fresh from the Ministry of Health, Labor, and Welfare. This report gives us a really important snapshot of what's happening with paychecks across Japan. And really, it all comes down to this one big question.
Are wages finally on the rise? Well, the short answer is kind of tricky. It's yes and no. And that's the central puzzle we're going to unpack today. You see, the actual amount of yen on our payslips, that number is definitely going up. But it doesn't really feel that way for a lot of people because our ability to actually buy things with that money, well, it just isn't keeping up.
So, let's get right into the headline numbers. To really understand the full story here, we have to look at two different types of wages, what we call nominal wages and the all-important real wages. Okay, so first up, the good news. According to the official data, total cash earnings, that's the nominal wage, grew by 2.4% compared to this time last year. Now, on the surface, that looks pretty good. It seems like a solid step in the right direction for workers. But, and this is the huge but, to figure out what that pay raise is actually worth, you have to stack it up against inflation. And in December, the Consumer Price Index, the thing that measures how much prices for everyday stuff have gone up, also rose by, you guessed it, the exact same 2.4%. And that brings us to the number that really matters most in this whole report. Once you factor in that 2.4% inflation, real wages, which is your actual purchasing power, actually fell by 0.1%. Now, it's a tiny decrease, but what it means is that despite getting a raise, the average worker is now slightly worse off than they were a year ago.
Okay, let's just take a second with this official chart because it tells the story perfectly. See those top lines moving upward? That's your nominal wage growth, the money in your paycheck. Looks positive, right? But now look down at the bottom lines. That's your real wage. See how it's been struggling, just bumping along that zero line for months? In December, it finally dipped just below it. That's the squeeze on your wallet right there in black and white. But that overall average doesn't tell the whole story. To really get what's going on, we need to peel back another layer and break down these numbers to see how different kinds of workers are actually doing. So first, just a super quick clarification so we're all on the same page. When we say nominal wage, we're just talking about that headline number. It's the amount of money you see on your pay stub before we think about what it can actually buy. But the real wage, now this is the number that truly affects your daily life. It answers the most important question. After inflation, how much can my money really buy me? It's the true test of your purchasing power. And the data shows a pretty clear split depending on your job status. General workers, their nominal earnings went up by 2.8%, which is actually ahead of that inflation number. But part-time workers, they only saw an increase of 1.8%, well below the rise in cost of living. And what's really fascinating here is that this isn't just a one-off for December. This chart tracks pay growth over the last few years. You can clearly see that solid line for general workers has been consistently pulling away from the dashed line for part-time workers. This shows a long-term widening gap in pay growth between these two groups. This all brings us back to the main character of this economic story: inflation. It's like this invisible force that's just eating away at the value of our paychecks. This chart just makes it crystal clear, doesn't it? You've got this positive bar here for nominal wage growth at 2.4%. But then inflation comes along, this bar right next to it, and just completely cancels it out. And the final result? That small negative bar for real wage growth. The pay raise was real, but inflation just made it vanish. Now, to get the complete picture, we need to look beyond just the wage numbers themselves. There are some other really important shifts happening in the labor market that are feeding into all of this. So, what's feeding into this? Well, first off, as this top chart shows, people are actually working slightly fewer hours on average. Total working hours per employee dropped by 1.6% compared to last year. It makes sense, right? Fewer hours worked will naturally lead to less total pay, even if your hourly rate is going up. And this chart points to a major structural shift. The solid line shows total employment is rising, which is great news. More people have jobs. But look at that dashed line. The proportion of part-time workers in the workforce is also on the rise. And since we already saw that part-timers are getting smaller raises, this shift is actively dragging down the national average. Okay, let's pull all these threads together and sum up what these official statistics are really telling us about Japan's economy right now. So here's the bottom line. Well, you might see headlines about paychecks going up,
The reality for the average household is that they're basically running in place. Inflation is wiping out any gains, so our purchasing power isn't actually improving. On top of that, we're seeing a growing divide between general and part-time workers, all while the very structure of our labor market continues to evolve. And this leaves us with the critical question for the future. For years, the goal was to create inflation. Well, it's here. But now the challenge has completely changed. We need real, sustainable wage growth that can actually outpace the rising cost of living. That's what's needed to fuel spending and get the whole economy moving. So the question is, will the pay raises in the year ahead be enough to finally break this cycle? Thank you for watching the Japanese Economic Review. We look forward to having you with us again.